Gold continued to be on the rise after it escaped the boundaries of its past sideways motion and since the 3rd of the month. The weakening of the USD may have played an increased role in the strengthening of the precious metals price. It's characteristic that the negative correlation between the two trading instruments was on display once again over the past 10 days, despite some interruptions. Since our last report, though, we have to note that two events tended to form gold's movement and direction. The first event since our last gold report on the 8th of the month that causes gold's price to jump higher was definitely the release of the US CPI rates for October. It should be noted that the headline rate slowed down more than expected. Yet at this point we have to note that the headline rate slowed down also on a month-on-month level, as did also both the core CPI rates, and all of them slowed down below market expectations. The report was an indication that inflationary pressures in the US economy have peaked and are on their retreat, while indirectly also reaffirmed that the Fed's rate hikes are actually working in curbing inflation. The soft reading quickly intensified market expectation for the Fed to ease its rate hiking path, and it's characteristic that the market currently prices in the Fed to proceed with a 50 basis point rate hike in its December meeting. Also, US yields dropped, polishing the value of the shiny metal further. The retreat of the USD seems to continue, and overall, as long as the market expectation for the Fed to ease its rate hiking path are intensified, we may see gold traders picking up the opportunity to buy the precious metal. It should be noted that the asset of gold's price higher seemed to slow down, especially after the weekend. Comments by Fed policymakers seem to cause second thoughts among market participants, whether last week's turmoil was a market overreaction or not. The USD tended to stabilize, halting its drop after Fed Governor Waller made some comments late last Friday. Fed Board Governor Waller practically stated that the Fed is not too soft in its stance against inflation and that more rate hikes are coming, yet tended to imply that the size of future rate hikes is to shrinking. Nevertheless, Waller stated that we've got a long way to go. In a similar tone, also Fed Vice Chair Brainard warned of more rate hikes to come. It also stated that soon it may be time to move in a slower pace of rate hikes. The comments, on the other hand, seem to allow for an easing of the Fed's rate hiking path, yet on the other hand warned that more rate hikes are coming and may imply that the end rate may be higher than what was expected. In any case, the comments allowed for the greenback to continue to weaken, yet at a slower pace, and a reverse allowed also for gold's price to continue to rise. We highlight tomorrow the release of the US retail sales growth rate for October, as well as industrial output growth rate for the same month, yet after that it may be up to the market sentiment and planned statements of Fed officials, and we expect the negative correlation of gold to the USD to be on display once again. Thank you for watching.